Come on. Let's go. Come on.
Who got him?
I've seen people take it down to 40 cents. It really depends how long you've been a customer, how much money you have in your account. But you usually can negotiate with them and get that commission structure down lower amount. Okay, just match the support, call it whatever you want. So the only problem, the con with Thinkorswim is that I say here has been declining its speed and reliability so far in 2020. So they've actually fixed that. So
you didn't claim about center, you asked me.
Much better, okay? But still, there's sometimes some issues like the first 5 minutes that they're open, okay? But that's kind of really the only con. And then that the customer service is sometimes slow and not very helpful. So that's something that I've experienced first. I used to trade with TD Ameritrade. I used to bank with TD Ameritrade and trade on Thinkorswim. But their customer service sometimes, I'd be sitting on the phone for 45 minutes, and that's not really what I wanted to be into. All right? But those are the only cons. Overall, it's a great broker, and I do recommend TD Ameritrade Thinkorswim. This is what it looks like. That the platform, right? So like I said, this is free. Once you get a Thinkorswim account, open that account up. You can go online, just type in Thinkorswim, download platform or whatever, and click on that, download it to your computer. This is what it looks like, right? So this is how I had it set up. I traveled around Europe for like 6 months and just traded straight from my laptop. This was my exact setup, right? So I had just a little watch list on the left. Had some news up here at the top, chart. I had an active trader and times and sales on the right and level 2 at the bottom. And I'll be explaining this because I'm actually going over the Thinkorswim platform live. I think on like day 10, okay? So I'll be explaining all that. Tastyworks is another popular one for retail traders, okay? It has options and stock trading, great execution and customer support from what I've heard. I've personally never traded on it, but I wanted to add it in here because I do know a lot of people who are very satisfied with it. For me, the platform was a little basic and confusing. It didn't have a lot of cool features that Thinkorswim has, so a lot of useful features, but other than that, I've heard great things about it, so I had to put it in here. And then it's a $1 per contract option commission. I think that's after $10. Lightspeed. So this is what I use. Lightspeed Trader. Okay, it's a beautiful platform with access to level 2 and sales. It has a short located or located hard to borrow stocks to short. Execution is direct to market. So I can actually choose the exchange I want to trade on. If I want to trade on NASDAQ or if I want to jump on another exchange, get some liquidity, then I can do that. Okay, so execution is direct to market. I'm actually choosing the exchange I want to trade on, and there's no middleman. Never has lag or problems entering or exiting a trade. So I've been trading on Lightspeed now. I don't know. But I've never had an issue getting into or getting out of a trade. Never, not even a single time. And you can route your orders to the USD. I just explained that. It's 60 cents per option contract. Okay, so in and out. And that's going to be based on how many contracts you trade per month. So for me, I think it's down to like 25 cents or something because I trade quite a few option contracts per month. But you can get
Waving hand.
and the account minimum is 20.
Well, look who it is. Well, look who it is. What's good? What's good, my boy? What's good, man?
This is also how I trade.
Oh, let me fix my camera. Let me fix it. I don't got my green screen behind me anymore right now. Anyway, let me fix my camera real quick.
Back in Arca, down here at the bottom left,
Oh no.
you can see those the full scope basically.
What's that?
And then times and sales in the middle here, order entry. So it's just click and buy, which is really nice. So if I want to buy 1,000 shares of Tesla, I just put 1,000 right there, click on the ask, and then click buy. Same thing, if I want to sell, I just click on the bid and then click sell. And then down here at the bottom is where I can trade my options. Right, so it's like Tesla 720 call. Right, you can kind of see it all right there. And this is also click and buy, right? So I can just put in the price, click buy, and I'm in the position. So it's kind of, it's a very professional broker.
Right.
There's orders, positions, and chart, little chart right there. But we all chart on TradingView, right? TradingView.com. All three of us use that for our charting. But this is Lightspeed for actual execution for me. Robinhood, very simple user interface, $0 commission fees on stocks and options, horrible customer service, horrible execution, and lag, okay? So I don't know how many of you guys were trading in 2019, but there was actually, there's been shirts been made, and there's a famous day, there's a shirt that says, I survived the crash of 2019, and the broker just didn't work for an entire day. So you guys remember, I think it was last week or the week before, Instagram, WhatsApp, Facebook were down. Robinhood was down for
Oh my God, bro.
36 hours. Okay, so no one could access their money, no one could buy in or buy out. So that was in 2019. I know they've gotten some updates, like they just introduced 24/7 customer support. That's new. Maybe they're trying to improve.
That's
but
cool,
in
man.
2019, Robinhood was kind of a shit show. Okay. The benefit
I'm
is
chilling, man.
$0 commission fees on stocks and options. You don't have to pay.
You know what I'm saying? Got off work today, you know what I'm saying?
It's okay
I'm
for
chilling.
swinging. I will never in a trillion years recommend that anyone
Yeah,
ever
that's money
day
every
trade
time.
in Robinhood. That is the worst decision you can possibly make. Okay? But don't day trade on Robinhood.
My man said he a shooter,
If you wanna use it
you know
for
what I'm
swinging,
saying?
that's fine. It is $0 commissions. That's cool. But like I said, they had some major issues 2019, 2018. Maybe they fixed them. I don't know. I wouldn't risk it yet until they get a little bit more, respected, right? Anyway, use them for swinging if you want. Don't day trade. So that's all the brokers that I have personally. Well, these are the
I'm a shooter too, though. You know what I'm saying?
have
Shit.
experience with that that I tested out or whatever people have
Oh,
recommended to
man.
me. I will mention some others. Interactive brokers. If you are international, even domestic, Interactive Brokers is another great platform. Okay, I have personally never traded on it, but I know people with large amounts of capital who trade on Interactive Brokers, especially if you're international. If you're in Canada, or London, whatever. Interactive Brokers is
You shot
another
that?
great broker. Trade
Oh, he shot his, bro.
is another great broker. Yeah, that's pretty much Webull. Okay, if you're just starting out, Webull was basically on the same level as Robinhood. Okay, a couple of years ago, Webull was the same thing as
That boy love that step back.
The lag was trash. Everything about the app was trash. But again, they've gotten better. Robinhood or Webull are kind of battling out to see which one is going to survive.
Oh, he got me. I ain't gonna
They're making
lie.
everything as good as they possibly can at the moment. So Webull, I've heard it's gotten way better. And starting out, I think it's an okay broker. But what I'm going to recommend is Thinkorswim. I'm going to recommend Thinker Smart. The summary, fundamental analysis. I'm just going to do a little brief summary about this.
Let's go.
To kind of show you guys everything that we'll be
We need to stop right
about.
here.
Just talking about trading, not just day trading. We'll also be talking about long-term investing. That's the cool thing about AMU. We don't just talk about support and resistance. We talk about everything, right? So I'm just going to show you real quick. Fundamental analysis is the stock market analysis. It breaks down a company's financial information and finds intrinsic value versus.
He had to. He gave it to. I'm not worried about no two.
Study on a company's past performance, present performance, and future expectations. Yahoo Finance provides a great rundown on every company's financials and balance sheet. Right. So this is up here at the top. This is an income.
No threes. No threes.
I just pulled this from Yahoo Finance. This is an annual income statement, right? And I'll be explaining this.
I was in this.
So you can see what this is about. An income statement: revenue, gains, losses, expenses, right? The revenue is an annual. So again, from 2016.
I just want to say good game, GG's. You know what I'm saying?
Gross profit. I'll be talking about all of this very in depth later.
That dude love y'all love reach on. That's
all I have. Again, this is just day one, so we'll just.
Bruh, oh my god.
This will gradually become more in depth, more advanced. A lot of information's coming. So make sure you guys are taking great notes, and I'll be passing it off to Robert now.
Hold on, I got you. Okay. No threes, no threes, no threes. Bro, why's he open? Oh, he dumb. What a dumbass. What? Okay, that's not my steps, okay? Bro, he just made me step back.
Welcome to NEAL University, day one.
Bro, we need three. Come on, bro.
Perfect. Alright. So do this drill, so can you
He could bam go. What? Bro.
You see my little laser pointer on the screen.
Oh no, I got you.
Yes to all three, right? Alright, so there is a zoom issue, so you guys should be aware.
What are you doing?
The screen, right? The one way you can fix that is you gotta log off and log back in. It's not a you issue, it's a zoom issue. So if you can't see
bro, we really about to lose these boys,
you
bro.
gotta log off and log back.
Nigga just shot some bullshit. What the fuck was that?
Everyone else can see the screen, right? There are only a few nodes I can see, but everyone else can see, right? Alright, so it's mostly yes. Just a few, so if you can see, just log off and log back in, and that will fix things. Alright.
I know we not about to lose it, bro. I know we not about to lose it, dog.
Learn about options, right? So before I get started, I want to know how many of you have no trading.
We really just lost.
Can I get a yes?
Cause that nigga just shot some bullshit.
Alright. Got a lot of me, so I know how to approach this lesson then. Alright. How many of you have, let's say a little bit, you've dabbled a little bit in options? Say me. Little bit. Alright. Alright, so I know I know how to approach this lesson. Alright, I just wanted to know that. So, table of content for today's lesson. First, I'll be giving you guys a good introduction.
What the fuck was that?
What are financial instruments? What are options? What are stocks?
Yeah.
I'm going to learn how Wall Street puts it, and I'm going to break it down into a way that makes more sense. Then we'll learn what are options. Characteristics of an option contract.
That nigga trash, bro. What the fuck, bro?
And a little bit more advanced concept. We're going to talk about writing options. Not too in detail, just the
Ain't no way we just lost it, bro. Y'all, bro.
Lastly, why we trade options. So
We had that game. It was trash.
Concepts.
And this dude want to shoot some bull.
People are arguing in the chat.
I don't know why they made me step back from that dude that shot the three. From my dude, like, I don't know why they made me do that. That was stupid.
Just pay attention to the lesson.
Like, you for real right now? We really just lost.
If you pay attention, take notes. Trust me, in these 4 weeks.
Bunch of bullshit.
Okay. All right. So let's get started.
Crazy, dog. That's crazy.
Now, what is an instrument? So in order to do anything, right?
Let's put down there. Wow, that's crazy. That's crazy, dog. Wow.
Piano, right? Whatever it is.
Wow.
You want to watch a movie? You need a television set.
Wow.
Right?
It's a loss.
Similarly, to transact in the financial markets.
Wow.
Just to participate in the financial market, stock market in general, right?
Well,
You
dang.
need a financial instrument.
Oh, damn.
When Wall Street says financial instrument, right?
Bruh.
It's just a way in which
Alright, I'm not gonna watch the
the
bill.
markets. Financial instrument is nothing but a financial contract between interested parties. Right?
The things I don't like about this
So
game,
complicated, right? If you
Bro,
are going to buy something, right?
you gotta change.
someone has to sell
When
it.
you change your face skin, it goes to every single other player, bro. That gets on my nerves, dog.
Right? If you want to go buy a drink,
Like now I gotta change them back to Michael Jordan. I gotta change them back to Shaq. I gotta change them back to Dirk. I gotta change them back to all these people, bro.
There's always a sell side. Right? Those are the two
It's annoying, bro.
in
It's
any
annoying.
transaction in the world.
Cause bro,
Now, financial instruments can be
I
created.
do all this,
They
bro.
can be traded. They can be modified.
Do
and they
all
can be
this.
settled. In a nutshell, financial instruments
Hold up real
don't
quick.
change money in the market. They're just a means to an end.
Cause I'm first of all, let me change my drip. First
You're
of
going to get
all,
money in return. You want to buy a
I
stock,
gotta make sure I'm
pay some
official.
money,
You know what I'm
and you'll be
saying?
owning the stock.
Make sure I'm the realest. You know what I'm saying?
That's financial instruments, but how can
Okay, I mean that's Shaq, but I mean.
right? So
I ain't gonna lie,
financial instruments can
Swag,
be cash
wow.
instruments and
Shaq look fresh. Alright, but
Now, this is very important, guys. Pay attention. What
me
is
tell
a
you my
cash instrument?
stuff.
What is a derivative instrument? If you understand these two concepts, right, you'll understand
real
the way
quick.
of
Let me take me back to
transacting in the
Jordan.
market. So let's say first cash instruments.
I got a video.
Now, cash instruments are those that the market.
Well, I did a video of me. I'm going back to my video real quick.
So let's take stocks. So stocks are considered cash instruments.
See, this how you made Jordan live. You know what I'm saying?
Right? Everyone loves iPhones, iPads, and whatnot, right? Now,
Yeah, no hair. You know what I'm saying?
Apple
Oh, you know what I'm
stock is
saying?
150. I don't know what the stock price is. I think it is down because Apple guided lower today after hours. So tomorrow, if Apple doesn't recover, we could see some big tech selling tomorrow. Anyway, so Apple, let's say it's valued at 150. Now you may ask me, hey, Andrea, why is it 150? Why can't it be 200? Why can't it be 300?
Just like that.
I
Boom.
like that number, right? You can say that, or you can say, well, Apple is not worth it. I don't like the iPhone. It can be 100. Now, Apple's stock price, right, is determined by the market. The markets value them directly. Now, it could be based on any number of factors. The market may think that Apple has good revenue, Apple has good cash flow, they have a lot of assets in hand, and there's very little liabilities, meaning they don't have a lot of debt, right? Could be any one of those reasons. And market is going to fight on valuations, current valuations, future expectations, future projections. By doing all that math, it's going to arrive at a certain number, and that's how the market's value is stock, right? It can be based on current earnings, it could be based on future earnings. We don't know. It's just that the markets are going to factor all of those things in, and they're going to determine Apple's fair value. Okay, so that's how stock prices are determined. It's not because some analyst just comes out and says that, hey, the price target is worth 300, 400. Cathy Wood's price target is 7,000, right? Tesla's struggling to hold 800, right? So there is a lot of factors going beyond in those valuations and everything, right? Anything can happen, right? So but the markets value them. Not any analyst, not you, not me. The markets determine the valuations of these things, these commodities, and that's why they're called as cash instruments. Okay? Cash instruments are those that the markets value directly. Now pay attention to the next one, derivative instruments. Derivative instruments are those that derive their value from movement of an underlying entity, such as stocks, bonds, etc. Now option contracts, future contracts, etc. are examples of derivative instruments. Now you guys can see, right, derivative instruments, the word derive, right? These instruments, they don't have any value of their own. So stocks, they have their own value, right? If I say Apple, I know it's 150, the stock price is 150 or 140 or whatever, right? But derivative instruments, they don't have any value of their own. They derive their value from something else. And in this case, if we're talking about stock options, they derive their value from movement of the stock. So let's say I have an Apple option contract, okay? I have an Apple call option contract, and I following the stock price of Apple. So currently it's 150, right? Let's assume that it's 150. Now Apple's stock price goes up, right? And if I have Apple call option contract, my call option contract is also going to go up, okay? Because it derives its value from the movement of the stock. Now if I have Apple call option contract and the stock absolutely tanks, right? Let's say it drops like $4-5 tomorrow, right? Now what's going to happen? Then my call option contract's value is also going to drop. Why? Because they are derivative instruments. They derive their value from the moment of the underlying entity. And in this case, our underlying entity is a stock. Okay? So those are the two. On a high level, that's all you need to know about financial instruments. They're just a means to exchange money in the market. We have two types of instruments, cash instruments and derivative instruments. Cash instruments have their own value, they have their own intrinsic value. Stocks are a good example of cash instruments, right? And derivative instruments derive their value from moment of an underlying entity, with the stocks or bond, etc. Options are derivative instruments because they derive their value from moment of the underlying. Okay? Is everyone clear so far?
That's Jordan, my boy. You know what I'm saying?
Perfect. This is
That's
just
your
a
boy
basic,
Jordan.
guys. Okay, don't complicate it. Alright, so now we're gonna come to the fun stuff. Now this is the fun stuff. What are options? Right? Now we already learned that options are derivative instruments, that they derive their value from the stock, right? Especially stock options. Now the book definition is, option is a derivative instrument that specifies a contract between two parties for a future transaction of an asset at a set price within a specific date, right? So just like how we discussed, so there are two parties, there is a buyer and there is a seller, there is a future transaction in question, they're on an asset at a set price within a specific period. I mean, this definition usually, especially if you're new to the world of options, right, it does not make sense and it will not make sense. It didn't make sense to me, right, back then when I first started out. I'm going to break it down to you in a more relatable example, okay? So let's take two friends, all right? One guy is Barry, another guy is Sam, right? Now, Sam is one of those guys that, like, just sticks to a sneakers app, and whenever some new sneaker drops, he just goes and buys everything, right? He just goes buys like everything. There are 10 sneakers, he buys everything, right? He buys everything and then he resells the $100 sneaker for $1,200 online. And some guys just still pay those overage fees and still they buy the sneaker because Travis Scott wore those sneakers or whatever. Right?
Got it on remote
So they just bought those sneakers. Right? So Sam is one of those sneaker resellers. Okay? Now Barry is friends with Sam. So he says that, hey, Sam, I know that there's this new sneaker coming out. I know that I'm not going to be able to buy it online because someone else is going to buy it. So I want to make a deal with you, right? I'm going to pay
That's
you
actually not bad.
let's say, as a commission, right? Do whatever it takes to get a sneaker, and I want to be able to buy that sneaker from you for $300 by the end of September. Okay? So that's exactly the deal that happens. So Barry and Sam are friends. Barry pays a $50
I'm gonna switch it up. White.
Sam,
Let's do
so
white.
that he has, some kind of incentive to go get the sneaker. And the deal that they have in place is,
make sure I got the right bands on real quick. Hold on.
$300.
Hold on.
You don't understand this
Hey.
deal. Can I get a yes? It's fairly straightforward, right? This guy gets a small commission as an incentive to get the sneaker, right? And Barry just gets into a contract with them, buy the sneaker for $300 by the end of September. Fairly straightforward. Now I'm going to review this definition again, all right? What is an option contract? An option is a contract that gives the buyer the right but not obligation. Now, Barry has the right to buy the sneaker for $300 by the end of September, but is under no obligation to do so, right? Just because it's just a contract. Just because you say that I'm going to buy something doesn't mean you have to buy it, right? Right? So Barry has the right to buy the sneaker, but is under no obligation to do so. Okay? To buy or sell.
Okay.
In this case, the deal that they have in place is for Barry to buy the sneaker. The underlying asset or security. The asset or security in question here is the sneaker, but in the world of options, you just replace that asset or security with a stock. Apple, Tesla, Nvidia, Google, Roku, beyond whatever, right? Whatever stock, that becomes the asset. At the agreed price. Now hear me on this.
Okay.
Financial contract or transaction always has to have an agreed price. So in this case, $300 is our agreed price. These guys made a deal. They have $300 as the agreed price within the agreed time. All financial contracts have a time constraint. Agreed time in question here is by the end of September. Okay? Now let me read this. An option is a contract that gives the buyer the right, but not obligation, to buy or sell the underlying asset or security and the agreed price within the agreed time. That is an option contract. Okay? Now, I know some of you are going to ask
James Harden, man.
What is the
Thomas crazy. Nah, I want to make James Harden again, bro. I gotta make James Harden. I got to. I have to, bro.
If there is stock in Walmart, you'll go buy that sneaker for $300. No questions asked. But let's say, right, this sneaker, he wasn't able to get it at Walmart. Okay? And 2 days, 3 days after launch, right? Kanye West or LeBron James or some other player, right?
Yes, sir.
Decided to wear the sneaker to boost its value even more. Now this $300 sneaker was already selling at $1,000, right?
I ain't gonna lie, I'm putting Hustler. I'm turning Hustler off, bro.
Even if the sneaker appreciates to $10,000, Larry has the right to buy it for $300. Now do you guys understand the power of this options contract? You have an option contract.
No, I don't need honesty. I don't think I do.
This is a financial contract, right? He has to sell it for $300, no matter what.
I almost got all my badges on this bill. Okay.
You
Just need one more playmaker badge.
$150 call option contract expiring next month. Apple's price today is $150. But October 18th, Apple has an event. They're going to release a new MacBook Pro. Let's say the MacBook
I do need bailout.
Stunning, right? The Apple's
yeah, I do need bailout.
All the value, everything pre-order, everything gets booked, right? Everything gets booked. What's going to happen? Apple's just going to rock it. Right? Apple goes to 180.
All right, bro.
150 is going to 180. If you have this option contract, you can still buy Apple for $150, even though the stock price is at 180. Okay? Now, you may ask me, what is the $50 you paid Snam in the first place? Right? So $50 is in the world of options, right? If you're going to buy a call option or a put option contract, right? You're not going to get the contract for free, right? You have to pay a certain amount to get that contract, and that is the $50 that you pay, right?
Please, nobody trash, bro. Please, no.
Right?
I just want somebody good, bro. Please, nobody trash. Please, please, please. Bro, I'm about to start this stream over, no cap.
Alright, so some key takeaways.
No cap, bro. I'm trying to close my app and then I'm gonna start this shit over. No cap, bro. Please, nobody trash, or I'm gonna start my stream over.
Rewatch the lesson, take your notes, ask questions. You guys will be fine.
Let's go. Let's go. Let's go. That's what I'm talking about. That's what I'm talking about. Look at Jordan, man. Now look at this dude.
Wall Street guys are not idiots, right? They don't simply just call something an option if it's not really an option.
You know it.
They call it an option because bank has the option to buy the stock, but not obligated. Okay?
Hope these boys not trash, man. I really hope you not.
Buyer can buy or sell the underlying security, also known as option. The buyer can buy the sneaker for $300, no matter what the current cost of the sneaker is. Right? That's the agreed price. Agreed time is the time constraint. This is the expiration date of the option. The option buyer has the right to exercise their option, buy the sneaker. Okay? Yeah, not buy the sneaker. Correct. Alright? So that's the introduction. I hope you guys are following so far. Right? Now, before we jump on to call options, put option and all of that, there are some key terms that you need to be aware of, right? Now, if you guys have been in the market for a while, you might have already hit this roadblock. Wall Street likes to use complicated terms, right? They like to use these jargons. Sometimes you may be able to figure it out. Sometimes you may not be able to figure it out, right? But we are here to make things easy for you. So let's just break this easy stuff up so that we can just move on. First, the strike price. Now, all stock option contracts can be associated with a strike price. This is the price at which the option holder can either buy or sell the underlying security, depending on the type of option contract. So in this example here, strike price is nothing but the agreed price. But remember, never forget this sneaker example, right? I even bring it up in the lesson number 11 or 12, right? So never forget.
I forgot my shot meters on, dog.
Is the strike price. Okay? That's because that's the agreed price.
Jordan, bro.
Agreed price is what they call as
The God.
Okay? Just connect those dots. Like try to remember that way. With an example, if you try to remember something with an example, you won't forget it. Okay? And then contract size. This refers to the fixed unit of shares that each option contract holds. The contract size for a stock option contract is standardized at 100 shares. So what that means is, for each option contract, the option buyer reserves the right to buy or sell 100 shares of the underlying security.
He had this too.
Specified in the option contract. So let me break this down, right? So when you buy one call option contract of Apple, right, you have the right to
Oh man, this dude garbage. What the?
At the strike price specified in this contract. So one contract is equal to 100 shares. Okay?
I forgot the shot meters on. I forgot. God damn it.
And it's not decided by you or me, and it does not change by the stock you select.
That's my steel 2K. Come on, man.
Options Exchange. In the US, the Chicago Board of Options Exchange decide the lot size or contract.
Looks, come on.
Standardized at 100 in the US.
He about to shoot it, so he should have shot it.
In other countries, however, it's different. So if you're trading in Europe or some other country, 75 share size lot. So depending on what the regulations are over there, it could be different. Trading the US market is always 100. Okay? To purchase. So remember the $50. Right? Sam received $50.
Oh yeah. Oh yeah.
Your brokerage app, right? You open your brokerage app. I'm going to buy Tesla. Tesla 800 call options. That's what you want to buy. So if you're going to buy that, you're not going to get that for free. Pay a premium.
This shot, bro. This jump shot is terrible. I mean, this jump shot meter is terrible.
Right? Whatever the asking price is.
I do not know how to show this jump shot meter, dog.
If you pay what they're asking for, you're going to get that option contract. And what you're paying is what we call a the price you must pay.
Hold on.
To be multiplied by 100. Now I'm not making this up. Let's go through this example. Let's assume the premium of Apple $120 call option is. Now that does not mean that you just pay $2.25, right? That would be stupid, right? I mean $2.
Oh, this is your my fault.
Right. That's like that's a scam.
My fault.
If you're able to find that, that's a scam, right? Previous slide.
Oh yeah. Oh yeah.
One contract equates to 100 shares.
That was too expensive.
You have to multiply one contract's premium, that is 225, whatever you see there, into 100. And that's the price you pay to purchase an option contract. Okay? Now,
there we go.
Next is
Dookie, stay. Let's go.
Now this is fairly straightforward. You guys should know this already. Now expiration date is the day the option contract.
Bro, I'm not lagging so bad. I'm good.
Option contracts and most financial.
So easy, man. Come on, man. Locks, man. Stop playing with me.
Constraint. No contract just lasts forever, right? So expiration date is the day the option contract expires. And
oh yeah.
Stock options have weekly, monthly, and quarterly expiration dates. This is another jargon that we use. So if you're in the chat, you see that saying we're trading.
Yeah, these boys suck.
Right? We're in the chat and
I was about to say
saying we're trading weeklies. What do you think that means? Let's see if someone answers. Yes, this week's expiration date. It's that simple. So
oh yeah, it's over.
Monday to Friday, right?
Okay, never mind.
Saturday and Sunday. So if you're saying I'm trading weeklies, that means that the contract expires this Friday. Okay? The contract expires this Friday, right? And monthly and quarterly, you guys know all.
You know, you don't play tomorrow. He ice cold. Got this boy ice cold. Come on, man.
But you don't have to worry.
Trash.
When we say weeklies, right, we mean that the contracts expire the same week.
Got that boy quit.
No,
terrible, bro.
Option expiration date, right? All option owners.
I'm Jordan, bro. Stop playing with me, man.
Contracts won't expire.
Man, let me hear this game.
Following choices, right? Number one.
Oh, they double teaming. Oh, he wild. He wild. Oh, ain't no way you missed that. Ain't no way.
So let's say you bought.
Ain't no way you missed that.
Right? The stock is at 150. Apple made a big rally right after the the upcoming event. The rally like crazy, right? your contract is up like 50%, you're up 50% in profits, right? And it's expiration date. What you can do is, you can just sell it to another guy in the market. It doesn't even have to be expiration date. You can sell it whenever you want, right? You can sell it to another guy in the market and just take your 50%.
Not worried.
Right?
I'm not worried.
There is nothing stopping you from selling. You can sell whenever you want, right? That is the beauty of option. You don't have to bag hold until expiration date. You can sell it whenever you want. So if you're up 50% on a trade, you can sell. If you're up 100% on a trade, you can sell. If you're up 2% on a trade, you can sell. Nothing is stopping you, right? The next thing is exercise the option contract to purchase shares of the underlying security. And then let's talk about it.
Nah, we definitely
Let's say
gonna lose that.
on Apple,
Yeah.
you see that Apple is currently at 180 and you have the 150 call options. You feel like, hey, I'm going to just buy shares of Apple and keep holding them.
That's where am I revenue at right now? Let me see.
Just hold them because you feel like Apple is going to go to 200 or something like that, right? So in those cases, you can exercise the option contract and buy shares. So in this case, right, if Barry decided to actually buy the sneaker, we will call it as exercise, option exercise, right? So because Barry is exercising his right to
Oh, I'm gonna rip up.
and buy
I didn't even know
the
that.
sneaker for $300, right? So when we say exercise, that's what
I'll do it next game.
right? And the last option, which is most likely not everyone's favorite option,
Yo, should I hop off?
expire worthless. So people only let it expire worthless when they cannot find.
Nah, I'm not gonna
sell
hop
their
off. I'm not
contract.
gonna
So
hop
usually
off.
they
I want the dude in the middle to hop off though. I ain't gonna lie, but he's not gonna hop off. I know he's
actually
not.
went the other direction, and you know, so your value of your contract is worth zero now. You can't.
Should I hop off on this team?
Now, another question. All US stock options can be exercised anytime before expiration. So in most countries, you have to wait.
Oh man, I started. I can't do it anyway.
US, you can do it anytime.
But I hope we win, bro. Hopefully somebody trash. I need somebody trash. Come
So
on.
that's enough for.
Come on, somebody trash. Somebody trash.
Let's
Come on.
jump onto the good stuff. But before I go, how are you guys feeling? You guys good? Is everyone following? Yes. All right.
Come on, please.
So,
Please.
what are the types of
Please.
options?
Please.
Yeah, don't worry. Somewhat, I
Come
say
on,
somewhat.
come on, come on,
Don't worry
come on.
about it at all, guys. You just gotta remember, guys. We've been doing for 8 years. Like we've been doing this thing for so long, so much.
Well, he's alright.
I always say this. I usually say to towards the middle of the course.
Think I can.
The only difference between you
You want
and me
legend
is that
before.
I've been doing it a longer time than you have.
You want
So
level
guys,
40
don't go
before?
slow.
Okay.
Just gotta
Alright.
rewatch, watch it again, Google, you'll get it, right? Don't worry about it. Okay. So types of options. There are 2 types of options. Nothing
Let's
to
go.
complicate. Call options, put options. You've probably heard these 2 options like 100,000 times, even if you
So we
haven't
got-
even been trading options, right? There are only 2 types. Call options and put options. I've colored it accordingly too. Call is green.
What this dude thought he was?
Right? So, call options gives the buyer the right, but not obligation, to buy shares of the underlying security at the strike price specified in the option contract. This
Come
is
on, man.
exactly the Nike
Come on, man.
that we saw, right? Except
It's too easy, man. I'm Jordan, bro.
we can buy the shares, right? And then
Come
when do you
on,
buy
wow,
call
come on.
options?
I need you to hit those, bro. Come on, man.
Stock price will rise by a certain amount by expiration date. Okay, just remember this. Call options, you buy call options when you think the stock price is going
It's alright.
That's why it's green.
It's alright.
Okay, try to remember it like this. You buy a call when you think the stock is going to go up. When you are bullish on a stock, you're going to buy a call option. Okay? Now, pay attention here. This is
He was
the
wide open
principle
too,
of
that's
call
crazy.
option contract. So, let's say you bought pins. Pins is pinless.
Oh, he should've
Like
passed me to me. It was an open
right?
one.
So they have those images. I don't know how they make money, probably by advertisement, but they're a social
Too
media
easy.
company too. So let's say you
Let's
bought
get it.
Pinterest, $20 weekly call option contract at $2. Now quiz time for you guys. Pins is the stock symbol. I already answered that. Now what does this $20 imply? What is this $20 call? Perfect. Strike price. Got a lot of answers. So in the Nike example,
Oh shit! I'm tripping. What the fuck?
300. Right. You guys should remember.
He missed it anyway. It's cool. It's cool.
Exactly. Right. What is weekly option contract?
I ain't glad I
What
was
does
gonna
weekly
move.
mean? This week expires this Friday.
Ain't no way I missed that wide open 3.
And when do
Ain't
you
no
buy
way.
call
I'm
options?
tripping. That shit is way too fucking
bullish, buy.
Oh, good shit.
When you're bullish on a stock, when you think
Good
the stock
shit.
is going to go up, you buy a call option. And what does this $2 imply? Alright.
Who does dude think he is, dude?
What does $2? How
You're not Vince Carter, dude.
When it says $2.
Like, you're not Vince Carter, bro.
Perfect. You guys got it, guys. That's it. That's how you read a signal. That's how you read a contract. You guys got it, right? When I say Pinterest, $20 weekly.
I thought he was Clyde Drexler, bro. Stupid ass.
Okay. So let's say you bought that Pinterest $20 weekly call
Okay.
contract for $200.
Wow.
And Pinterest at
Damn, nigga.
trading at $20 per day.
It's cool, it's cool. And okay, never mind. You just, I ain't gonna lie, you just down bad right now.
Very easy, right? The x-axis, we have the stock price, right? The stock is at $20 right now. It can go down, it can go up. It's just a graph, right? On the y-axis, we have profit.
Bro.
Okay?
I don't know why you shot that shot. I'm pretty sure you didn't mean to do that, but it is
When you
what
buy
it
a
is.
call option contract, you start to make money, the stock price rises.
I know he didn't mean to me. I know he didn't. I knew it. I know he didn't mean to take that shot.
Our max loss is 200.
You wide open, bro. Come on. Oh my God. Ain't no way, bro.
Premium to purchase this contract.
Man, get that out of here, man.
$200. So the maximum loss I can incur is $200. Nothing more, nothing less. 200 is what I can lose. Imagine if you put $50, and how can you lose $100? Right? It doesn't make sense, right? It doesn't make sense, right? So if you risk 200, that's all. That's how much you can lose. Your maximum potential loss is 200. And usually we don't allow us to lose everything that we put, right? So sometimes when we risk money in the stock trading world, we practice risk management. We have stop losses and all of that, right? So sometimes when we know that we are wrong, we're just going to take a $20 loss instead of
Yeah, they gonna keep fouling.
So that's how we manage that. So don't worry about it. But in this case, 200 is your maximum potential loss, right? But today being the first class, we're not going to talk about the losses and all of that, like, you know, all that stuff, right? We're going to be positive, right? So we bought a $20.
Oh, you said they say you can shoot.
Bought it, right? The stock price just started to go up.
Why can't I hear? They made me or something.
23, it went to 24. Stocks just keep going up. Now, what did I say in the first slide, right? Options are derivative instruments. So when you bought the Pinterest $20 weekly call options, as stock of Pinterest keeps going up, what will my options premium do? Premium will also go higher, right? It will also go up, right? Stock goes up, premium goes up. So your premium was worth $200 then it became 300, then 400, 500, 700, 1,000, right? Just gonna keep going up.
I guess.
Right? Now you may ask me, hey, Unraveler, the strike price is $20, but does the stock have to go to the strike price or vice versa?
Why not let me pass? What the fuck?
Like, don't confuse.
It's not letting me pass. What the fuck?
When you buy a call option contract, you make money if the stock price goes up after you bought it. Okay? It's as simple, right? So the stock goes up. Don't worry about how much it moves right now. You don't have to worry about it right now. You make money, the stock price goes up. Let it be 50 cents, let it be $1, let it be $10, let it be $10. You make money when it goes up. And as an options trader, you will start seeing those profits as soon as the stock price starts moving in your favor. You can ask me, when can I sell? When to sell? Now we'll teach you technical strategies to, get good price target areas, but you can sell it whenever you want, right? You can sell your option contract and secure the profit anytime. You don't have to hold it if you're not comfortable holding it. If you see that, hey, I made $100, I'm going to.
Oh yeah, baby, yeah.
My $200, I'm going to sell it. You can do it whenever you want. Okay? Is everyone following? Yes? You make money when the stock price goes up. That's it. You buy a call option.
Come on.
You make money.
Come on, too easy, man. Come on.
And for exercising the option, you don't have to worry about
Yeah, like, what's he doing?
The price is 22 in this case. For break even is a
Come on.
you don't have to really.
Your dude's a shooter, bro. Come on, bro.
Exercising the option contract. So how I got the break even prices? You see the strike price is 20, right?
Yeah, about that. Yeah, about that.
Price and the premium 222. So 20 plus 2 is 22. So for the option contract to break even, the stock has to be about $22. So don't worry about this. This is not relevant for you guys. I'm just going to skip this. Alright? And next is
Oh man. Oh man, this dude trash. Oh man,
not
bro.
obligation to sell shares of the underlying security.
That is so fake, dog. I promise you, bro. That is so fake.
So someone asked me a question. Even if you don't buy a share, you still get the profit.
What?
You don't have to.
How you give me an animation and then miss?
Contract, right? So basically, what we're doing is we're trading.
I hate this game, bro.
We're buying the option contract for $200. Think about it like flipping, right? You're buying it for $200, and then let's say the stock goes up and the premium is worth $400 right now, right? The stock went up, your premium is worth $400 now, so you're.
Hey y'all, spam L's and say I ain't gonna lie. We lost. I ain't gonna lie. We lost this game.
Okay. Makes sense? Yes. Basically, we're flipping options.
That's tough.
That's what we're doing when we say we're trading options, right?
Yeah, I ain't gonna lie. That's
Example,
right.
right? So this contract was worth $50.
That nigga just sucked. That nigga just sucked.
So the sneaker is worth $2,000 now. That obviously that contract with Sam and Barry had is worth $300, $400, right? So Barry can sell that contract to another guy in the market and secure that profit. So Barry can flip the contract when Sam is flipping the sneakers.
That's tough.
I can't speak that language. I'm sorry. All right.
Okay, so that was not 3-second violation.
Here,
Right,
let's see for this example.
I swear to God.
So let's say
If you would have made that, I would have turned my game off immediately.
Weekly put option contract for $300. Okay. So same question. So Uber is the stock symbol. What does $40 imply?
Damn, I passed the wrong person.
Right.
I passed to the wrong person, bro. That's...
Just making sure you guys are just getting into the head. What is put option? When do you buy a put option? You're bearish. If you think the stock is going to go down, you're buying 3.0 is the?
That nigga sent that shit.
Perfect. Alright. You guys got it. I'm not going to do you again. You guys got good. Alright. So, let's look at the graph here. X-axis we have the stock price, Y-axis
Yes,
we have
right.
the NEAL. Right? We bought Uber when it was
Yeah.
$40 per share. Now
That's tough.
it just happened,
Yeah.
you feel like, hey,
And our level though, that's
Uber,
tough.
because they're all
Damn.
stuck at
I'm for
home.
loss.
So I think Uber is overvalued. I'm going to buy a put.
Damn.
I'm going to swing trade it. Let's say that's your idea. And you bought $40 weekly put, right? Now you see Uber dropping to 39, 38, 37, 36, 35. You can make money even when the stock is dropping. You have put options. And
Bro, this dude is terrible. 0 for 4, bro. Come on, bro. You wild. You be wide open too, bro. Come on, bro.
it just goes on, right? And the stock
You
is
disappointed me, bro.
you're just going to keep putting
0 for 4, bro.
And as an options trader, you can take profits
Trash.
whenever you want, and you know, that's why selling it to another player.
Like 0 for 4, bro. You wide open, bro.
Have money.
There's no way you not making these
Does
shots,
everyone
dude.
understand you don't understand it?
You
Jonathan,
trash,
what
bro. I
you
promise you,
understand?
bro. Alright, bro.
Okay. It says minus 300.
I might go to the park.
That's what you're risking. Okay?
Let's see you at the
The
park,
graph,
man.
don't worry about
Actually,
the graph, right?
I can just
That's
go
what I
there.
said, like sometimes the graph can be confusing to a lot of people, right? Minus 300 is your max loss. Now let's say you bought your put option here, right? Right? You bought your put option here, right?
I'm glad they made the zip line. This is so useful.
300 to quit. Sorry, you risk 300.
So useful, bro.
Actually, I just read someone
No
saying I
cap, bro.
quit my job, right? You risk 300 to enter this trade, right? So that's the
Flip
maximum
right in the
amount you can
commas,
lose.
you know
You
what I'm
can't lose
saying?
more than what you risk, right? You guys are funny, right?
Okay, this is packed. Where's the subway?
Someone asked a question, but Jonathan asked me a question.
Yeah, where's the subway? Yeah, this is packed.
Alright, so let me just repeat this whole example again.
It's packed to
Alright?
1,000, bro.
So, let's say
Where's
you bought
Subway?
over $40 weekly put options.
I forgot where the subway is.
Now, you
Oh,
buy
yeah,
a
it's
put
right here.
option when you are bearish on the stock, meaning you want stock price to go down. Okay? Is everyone clear on that part?
Come on, somebody get us
Everyone
on. Come on.
okay? That
Open
part
spot,
everyone
open spot.
understand,
Come on.
right? Now, currently the stock is at $40 and you want the stock price to go down. Stock drops to 39. Stock drops to 38. Stock drops to
Come on, man. What are you serious right now?
35. Stock drops to 34. Okay? The stock stock is dropping. Now our premium was $300. That is what we risk to enter the trade. Now as the stock keeps dropping, our premium is going to rise. Okay? Our premium is going to rise because options are derivative instruments. We bought a put option contract. We want the stock price to go down, and as the stock price goes down, our premium is going to increase. Okay? Now, 300, you're going to make $100.
Bruh, these courses are so.
And over here, you're break even, right? And then 100.
I know beefing from the east is packed, like always. Beefing from the east is always packed. Always for no reason. I don't know why. This is always packed.
This is actually correct.
Like I never see any open courts on beef from the east. Watch this. Watch this. Now watch this.
Map out your risk, right? But don't worry about this.
This is actually open court. Wow.
What you need to know right now is.
But watch, it's gonna get taken. How much you bet?
The stock price is supposed to go up.
As soon as I check, oh yeah, these dudes trash. Oh man, yeah. Of course, about some trash people, though. Of course. Well, I'm not surprised.
So, next slide.
Well, I'm not surprised, bro. Look at these dudes. EKG cash. I know you trash.
Okay.
Your name sounds trash. Wait, who is it? Ace Spaz.
Okay. Right. Pay attention now. These two slides are important, and this is a prerequisite for the Greeks lesson, which I will teach you in lesson number 5. Okay? Right. So, first things first, this lovely picture that you see in front of you is what we call as an options chain. Right? So, on the side, you have all the call option contracts.
I mean, you can shoot.
You have all the put option contracts.
Let's see.
Okay? So, you can also see that this is the
too late. No, I guess not.
Chinese company.
I mean, yes, he was alright. He's alright. What's my record right now? My record is negative right now. 2 losses away. That's tough. That's tough.
Okay. First thing I want to show
alright, next.
All the puts will be grouped on
next.
On most.
South City Vipers. Let's see if it's.
And, I want to show you guys ITM, the differences between the ITM strike prices, ATM strike prices, and OTM strike prices. Now, before someone asks me a question, why is it called that?
Was that D? Oh my god.
But I will cover the more in-depth concepts.
Did that dude just dab at 20? Bro, why did my players just dab at 2021?
If some of you know more about this stuff, like keep it to yourself, right? Because I don't want the others to get confused at this point. Okay, I will just cover the basics today.
Okay. Okay.
So,
alright, hold on. We gotta go.
So when we say in the money,
I can't ride my board. That's so weak. Yes, I can.
So when you buy strikes, right? I said weekly and all of that, right?
Go.
Right? One is in the money strike.
I know these dudes trash. Come on. Please be trash. Come on. Celtics, whatever your fan. Never mind. This dude look like.
I'm going to explain.
Oh, he's trash. Hold on. OG. But he can score though. OG.
Okay. So first take a look.
Bro, who is this, bro?
In the money strike prices. The call option.
Go.
Let's take a look at this, right? Over here, you have all the call options. You have the put options.
What the heck is this, bro? Hey, I'm on the court.
In the Nike example,
you know what I'm saying?
If current price, you have the option.
Am I supposed to spawn the court?
Nike sneaker at $300, right? That's the option.
Woohoo!
Now let's say the current price of Nike, like Walmart has stock of the Nike shoe. The current price of Nike is $150. Okay? Will you still exercise your contract and buy the sneaker at $300? No, right?
What is that?
But let's say the current price of the Nike sneaker in Walmart is $800. Will you exercise your contract to buy the sneaker at $300?
I hate when that happens, bro.
The answer is
a whole squad gonna hop on, dude. I thought this is no squads. No, the other one was. Oh my god, bro. That would have been an easy game, dog.
Now, let's take a look at this example.
Every time something happens, every time. I promise you, bro.
Prices that I've highlighted 104, 3,
Come on, hurry up.
99, 98.5, 98, 98.
Bro, oh my god, I'm about to get spot taken. Bro.
They're already profitable. The current price is 105.
But what is taking so?
Strike prices are under 105. Same Nike example, right? So if you have the 100,
God, dog.
you have the right to buy 100 shares of Baidu at $100 per share. Even
Dude,
though
name
the
is
current
Spanky.
stock price is 100.
What kind of name, bro?
Okay? It's already in the money. Always remember the Nike.
Trash.
I'm telling you, right? Especially
Smooth Dre, he look
just try to
good.
relate.
Okay, he is good.
You'll understand.
Hold on, top shot or
Contracts
something.
are in the money.
Top shot, top shot, top shot. Come on, son.
Okay? Does everyone understand this concept? Can I get a yes?
Top shot, top shot, top shot, top shot, top shot. You
Or
about
does
to take a
you
spot, you
want
about to take a
yes
spot.
and said no. Okay, I'll address that. In order to understand, right? Okay, I got 3 no's. Alright.
No. Hop off. I press circle. Come on, bro. I press circle, bro. Now I'm on court, dog. Oh my god, this gonna be L. This about to be L, bro.
$500.
I press circle, dog.
It's more expensive at Walmart.
I literally use spammy circle, dog. I was spamming circle and it won't let me.
For 300, right? Because at Walmart it's more expensive, right? That is the exact example, right? You have the $100 contract to buy Baidu at $100 per share. In the market, it's $105. So it makes sense for you to exercise this contract because it's already profitable. These contracts that are in the money, that is under the current price of the stock, are called as in the money options. Okay? Just rewatch the lesson, you'll get it. Same thing for put options. Alright? Same thing for put options. You buy put options when you think that the stock price is going to go down, and when you have a put option contracts, you have the right to sell shares at the strike price specified in the option contract. Okay? Now, let's say you have the $110. Let's say you have the $110 strike price, meaning it gives you the right to sell shares of Baidu at $110 per share, even though the strike price is 105. You have the right to sell something at a higher price, even though the current price is just 105. Okay? So all these strike prices that are above the strike price, above the current price of the stock, for put options, these are considered in the money. Right? So once you get used to the world of options, right, you will know that anything above the current price of the stock, like in the options,
I'm streaming, dude.
For call options, anything below the current price of the stock is or in the money for put options. That is how you will remember when you once you start trading now. But I wanted to explain to you the
let's go.
That is why it is called in the money, because these are already in the money.
Oh, you fouling.
Okay? Now,
why you fouling?
Straightforward. A call or put option is considered at the money, but the stock price is the same as the option strike price.
I got you.
Okay?
Oh yeah.
Arnold, I will explain what is good and what is bad later. Okay?
Why they fouling? Why they fouling?
In the money options, at the money options,
the
money options. Yeah, see, someone on Connie has the same question, right? Like I will explain that.
I forgot my shot meters on. Oh my god.
I will explain that later in lesson number 5.
I forgot to turn it off.
In order to weigh the pros and cons. For right now, I just want you guys to know what
the fact that pass went through is so stupid.
And out of the money means. Okay? Don't try to learn everything on day 1. You will just
passing. Yes. Come on, shoot that.
Does everyone understand what in the money means?
Good shot, my boy.
Just that. Yes, right? It's fairly easy, straightforward. Does everyone understand what at the money means? It's just the same strike price.
I wasn't paying attention, I'll be honest.
Okay? Alright.
Ooh.
Next is out of the money. You guys already know this, right? What out of the money means. So I already
He done on, little boy. Come on, man.
The price of the sneaker, right?
I'm Jordan, bro.
It's $300 per our example, right? Nike contract. You have the contract. You have $300. That's
I knew that was in.
Now in Walmart, suddenly they have a lot of stock and the sneaker is selling for $100. And you
Yes,
have
sir.
$100 contract.
Let's go.
Now, I won't buy that sneaker for $300 when it's selling at Walmart for $100. That is just stupid, right? Why will you overpay for something or like 2 times retail when it's already,
defense.
you know, this is on stock? That is the same example here. If you have the $110 call option contract, pay attention, guys. You have the right to buy Baidu at $110 per share, but the current price of the stock in the market is only $105. So
What?
these strike prices are not profitable. They are out of the money. They are future prices. The stock has not yet gone to these levels. The stock is only trading at 105.
He could win.
That is why we call it as out of the money options.
Or,
Same thing for put options.
hey man, do you? Never mind. Okay.
105. So all these strike options above here are out of the money, right? 104, 3, 2, 1. These are future prices. So only when the stock drops $5 more.
You want a 3, you want a 3, you want a 3.
Right? For now, it's a future strike price. So all these
Good defense.
are out of the money. Okay? So far what we've seen is, we've seen in the
I'm telling you, they want a 3.
at the money options and out of the money options. In the money options are
Let's
option
go, though.
contracts that are already profitable if exercised right now.
You
Because
fouling.
their current price is already greater than the current strike, all the strike prices that we've specified here. And at the money, the strike price and the stock price are pretty close to each other. Out of the money, these are future strike prices.
Bruh, how many fouls does dude got? 3 fouls. Bruh.
Okay?
This dude spamming square,
In the
dog.
money costs more than out of the money options. So you see this column here, right? It's the last actually means last traded price, right? You can
Good
see
shot, my
that
boy.
some of these contracts, right, as they go down, they get cheaper and cheaper, right? In the money options are more expensive because they're already profitable. But don't confuse yourself about that right now. I will explain options pricing and options greed in lesson number 5. Okay? Don't worry about why like all of that right now, right? We don't have time to cover all this now. On lesson 5, we will cover it. Alright. So now we're coming to a little bit more advanced topic.
Stupid.
But I feel like if you're going to trade options, even though you may not be doing options writing, you should know what options writing is.
Yes, sir.
I'm pretty sure
Locks. Stop playing with us, bro.
First year of your trading career, but it is something that you absolutely need to know. Okay? So,
I've had some on person.
also known as
I'm
options
a fuck.
writing. Options writing is a strategy where an individual writes or sells an option contract to
But he got 5 fouls as total for the team.
That is the fees. Now, I explained to you guys, right, in the first slide itself.
Man, get him off the court.
Every transaction has a buy side and it has a sell side.
All you do is reach, bro.
For everyone that's buying, there is someone's selling, right? In the market, in the world, you know, in general, right? But these option contracts itself, right? They are financial instruments, right? Someone out there has to create these contracts to fulfill. Have you guys questioned this at all, right? I've mentioned that, hey, for you have the right to buy 100 shares.
Hour? That's it, only hour?
Right?
That's tough.
So-and-so stock
What time is it?
at the strike price by the expiration date. Now, who's going to
Can I see what time it is?
Has anyone
Oh, it's 2:13.
I said that if you have $100 call option, you have the right to buy.
Oh, no, give me off the court.
$100
Give
per
me off
share,
the court.
even
Give me
though
off the court.
Playz is trading at $105.
Hold on.
Have you
Hold on, wait. I'm gonna get back on. Now let's see these boys trash. Let me see if they trash.
At $100 per share.
I gotta see their badges.
Like, there should be a question
spam.
that we should be asking, right? I mean, who would be selling that to you? The only person who would sell that to you is the person
spam
this
the
contract
fuck.
because they have the obligation to sell that. Those are the first
I'm
things
glad I
that
hopped
care.
off.
Remember this all the time, right?
You know what I'm saying? I'm glad I hopped off.
$50.
Boys thought they were gonna get a free game. They thought they stupid. Stupid boy. You thought you about to get a game.
And then he's
You know what I'm saying?
signing a contract saying that, hey,
Oh, you got me messed up. Got me messed up. You thought you were gonna get a game too, but over here. Let's see.
Sam will have
Let's see.
Sam has the obligation to sell
Who is
the
over
sneaker
here?
for that amount. He has to give the sneaker away. Okay? Now the same concept applies to
If I wish I could see his name. What the? Jimmy's
Sam is
panties.
the writer. Exactly. Sam is the option writer here, right? Because Sam has agreed to this contract. Sam created this contract, right? Sam gets $50.
Oh yeah, these boys garbage.
No. David, you're going ahead, but you're on the right path, right? Sam gets $50, right? Sam gets $50, and he has to sell the sneaker. So imagine $50, he gets it. That's the premium that he received, and the sneaker is Apple stock. So he has to sell this Apple stock for $100, even though the stock is at $20. Okay. Now I'll get to use this. You guys are going to love this, right? I can see some of you are eager. You guys are going to love this. So options writing is a strategy where an individual writes or creates or sells an option contract to a buyer in the market to collect the option premium or fees.
I can't get no game, bro. I promise you,
I like to
man.
use the word create, right? Because that everyone understands the word create. Creates an option contract. They are obligated to buy it. They are obligated, depending on the type of option, the underlying security, and the strike price should there be an assignment. Now, I'm going to review this. This is the grid that we have been we're supposed to learn, right? So options, you have the buy, you have the writing. This is what we've been discussing throughout the class today. We're talking about buying call options, we're talking about buying put options, and we buy calls when we think the stock price is going to go up. We buy puts when we think the stock price is going to go down. All of us are clear on this, right? This part of the grid, we are good, right?
Piss me off,
Yes?
dog. I promise you, bro.
We're good. This very straightforward, you guys are good. Now, writing part is actually very good.
Yay, now there's no games open. Yay. Hey, but at least you got that window, at least. Wildcats is always packed.
Contracts. You can create put option contracts. You can do that. There are covered options and naked options. Don't worry about it right now, but you can create both call option contracts and put option contracts and receive a premium. So this is
Oh, free game over here.
Right? So writing call options.
Free game over here.
When writing
Well,
call
I
options,
hope it's easy
the writer
game.
collects premium
Most likely not, but
and
let's see.
sells shares of the underlying security.
Oh, it's easy
and the
game,
strike
easy
price
game, easy game.
specified
Please,
in the
easy
option
game.
contract should there be
Please,
an
easy game. Please.
So
Oh, they gonna take it. They gonna take it. They gonna take it. They gonna take it. I ain't gonna. It's
if you're a
easy.
buyer, right?
Easy.
You buy, the buyer has the right to buy the stock when you buy a call option contract, you want the stock to go up. When you buy,
That was my fault. That was my fault. I sold that one. I ain't gonna lie. I sold
you
that
can't get an
one.
option contract for free.
I sold that
Pay
one.
premium. In the case of Barry and Sam, Barry paid $50 to get the contract, right?
That shit
Same
just
thing
went
for
on
seller.
like an idiot.
So if you're a writer or a creator, seller has the obligation to sell the stock or the sneaker in the case of Sam. Seller wants the stock to depreciate in value, right? Now, Barry has agreed to buy the sneaker for $300, but Barry will not buy the sneaker for $300 if it's selling at $100 at Walmart, right? So Sam wants the sneaker's value to depreciate because he can just keep the premium, right? That is the goal for Sam. Sam's goal is to not to sell the sneaker for $300 to Barry, but to just keep the premium, right? Sam just wants to keep the premium. That's the seller's main goal. Seller's main goal is to make sure that this option contract expires worthless. Alright, so let's take a look at this example. Apple make a call. Wrote or created Apple $300 call option expiring 5/15 and received a premium of $400. So basically how you would read this is John created a $400 call option contract and he collected a premium of $400 when someone bought it.
Come on.
John received $400 just for creating that contract. Okay, that is the premium he received.
Where I'm at.
Now on
What the?
5/15, that is the day of expiration, Apple closed at 310.
Go.
Crazy. It gained $10 more and it expired in the money.
I'm so slow. Come on, man.
This is when you
Bro, I miss my animation running, bro.
So sneaker costs
Why did they
$300.
change it, bro?
Current price of the sneaker in the market
Okay.
is 310.
Come on.
So it's in the money.
Boxed.
So will you buy something for 300 or 310? The answer is He will buy
Box up.
300. So John will be obligated to sell 100 shares of Apple at $300 per share, assuming John is assigned. In this case, John will be assigned because the option is in the money. Now, John does not have 100 shares of Apple to sell because.
And look what this trash dude.
Okay, so what John
Look at
will
this
have to
dude.
do is John will have to buy.
Dude name is Callus. I mean Sellers.
At current market price. So $310 is the current price of the stock. Right? So he will buy 100 shares of that. And then
Oh, somebody else know this?
it at $300.
I guess it is.
He'll buy 100 shares
Or
of
not.
310
I don't know.
and sell it at $300.
Oh no, he didn't. He's just standing there looking stupid.
Into 100.
Look at this
John will
rip
lose
off Michael
$1,000.
Jordan.
Okay?
How you do? How you make Michael Jordan but not the right number? That don't make no sense.
Contract, so his net loss on the trade is $600. Okay? So basically, if it expired in the money, right? Someone asked me this question before. So does Sam get to make $350? No,
Smoke,
he doesn't.
aim,
Right?
shoot.
If the sneaker actually appreciates in value, right? If the sneaker is at 310,
Smoke,
that's when
aim,
Barry will
shoot.
want to exercise, right? The current price of the sneaker in Walmart or somewhere else is more
Good.
expensive than the contract. That's when
Oh, yeah.
he will exercise his
I
contract.
thought y'all be
Right?
like,
So in
you can
that
hop over
case,
though. Oh, that's just.
John, yeah, you will receive the premium no matter.
I told you. I told you. I told you.
The sneaker is 310.
Every time.
So this guy is actually taking a loss.
Every time.
He's
I
taking a
promise you.
$1,000 loss just by selling 100 shares of Apple at 310 instead of 300 instead of 310. And the loss is minimized because he received the premium for $600. Now scenario 2 is what John actually wants. If Apple closed at 298, right?
Oh, is that
If Apple
being
closed
sure?
at 298, that is out of the money, then the option will expire worthless. John simply made a profit of $400.
Are you serious right now?
Now, have you guys ever thought of it, right? So Tesla last Friday, right?
Bro, man.
Like last Thursday and Friday. Thursday they managed to break above 800. It went as high as I think 805 or something like that. Everyone started buying calls, weekly calls. Oh, Tesla is going to the 850.
That's so nice.
You already see some people in the chat posting. So like Tesla breaks 807.25. It's going straight to 860. Because I saw someone posting that. Right? That's not going to happen, right? What those market makers and all the hedge funds they did was, right, they pinned Tesla under 800 after spiking the premium. They sold all those contracts for a great price. So 850 option contract was selling at $600. There was absolutely no way, unless Tesla closed above 810 or very strong, it was no way it's going to squeeze to that much, right? So all these guys, they propped the option prices up. They sold all those contracts. The next day Tesla dropped. Right? Friday Tesla dropped. It broke 790. It dropped all the way to 778, I believe. 778, and it crushed everyone. Right? Crushed a lot of people because previously everyone swung those 800 contracts. Right? So all these option writers, right? They want to collect the premium and they want all the option contracts expire worthless. And a fun fact for you guys, more than 75% of all option contracts expire worthless. Okay? So options writing is actually more safer and more consistent. The money may not be great, but it's consistent money. So all those big funds, all those market makers, they make a lot of money just by providing liquidity, providing options contract. Okay? Now, what is the difference between writing naked and covered call options? Writing naked call options means is exactly what John did. John did not have 100 shares to sell, right? So he had to go to the market and buy. So that's why we call it as naked. But if you have covered, when we say covered call options, right?
Please be trash.
You actually own the shares.
And he's not trash. Oh my god.
John had 100
I know he's
shares
not
to sell.
trash.
Then he could
Ain't no way he is.
going to the market.
Patch
Okay?
made Harry.
Now,
I ain't gonna lie, that's a fire
some
name.
important things to know. Risk
That was a
associated
fire
with
name,
writing
man.
naked call options.
Patch made Harry.
Stocks can technically go to infinity.
Patch made Harry. That's a fire
Right?
username.
Let's say you wrote
Yeah,
a
nigga, your
naked
name
call
Harry.
option on Tesla, right? You wrote something. You wrote an $800 call option, and Tesla reported earnings, and they just crushed earnings. They rallied to 900. and then squeezed all the way to 1,000 because a lot of people were short, right? The stock can technically go to infinity. So if you write a call option contract, the stock just keeps rallying, then your risk is infinite. So imagine, if you didn't have the stock and the next day the stock opens 100%, 200% higher, you will have to buy that at that price and then sell it for 300. Now that is something.
Yes, sir, James.
Because the risk associated is infinite, but there are ways to minimize your risk. You can do covered call option, right? You can buy your stock outright to cover your positions. You can do a lot of stuff to hedge yourself.
Let's go, babe.
But this is the risk associated with make it follow.
Time on hard and wash. Shut up.
Next is put option. Writing put option. When the writer writes put option, writer collects the premium and agrees to buy shares of the underlying security at the strike price specified in the option contract, should there be an assignment. Now let's take another example. Suppose John writes NVIDIA $300 put option contract expiring 5/15, collected a premium of 500.
61 field goal percentage, bro. Stop playing, man.
Contract, $300 put option contract, and collected $500 in credit. On 5/15, NVIDIA goes to 290. Unfortunately, John wanted NVIDIA to just keep going up because he wrote a put option, but NVIDIA dropped and it expired in the money. John is obligated to buy 100 shares of NVIDIA at $300 per share. That is the strike price. Okay? So John bought NVIDIA for 300 even though the stock is trading at 290. Okay? So it's a $10 loss and 100 shares, so it's $1,000 of loss. But his loss will be minimized because he collected $500 in premium in the first place. So he lost $500 on the trade. Now scenario 2 is John's happy scenario. If NVIDIA actually went up, the put option contract would have expired out of the money and worthless. So John would have just simply made profit off of the premium. Okay? Yeah, just review the writing slides, guys. I mean, like I said before, right? These options writing concepts for you right now are on a need to know basis, right? It's good to know these concepts exist, but you are not going to just start writing contracts, right? I mean, even we just write contracts during earnings season to collect the premium, right? Because the risk reward is not worth it. You will have to risk a large amount of capital to make such a small amount of money, right? You can make more money just by trading options outright, right? But the more your account grows, the more you want to make these small monies, right? There's different sources of income, so it's really good to know these concepts exist, okay? All right, make it put option writing. This is the same stuff, guys. I just want to explain this to you. So the risk associated with writing put options, right? The risk associated with put option is that they can go to zero. Think about, everyone knows Hertz, right? The car rental company. So these guys are actually trading at $20 or $30 or something, right? And overnight, what these
the Parsons,
the stock dropped 99% the next day.
Yeah. The
So
parts,
you are someone that actually
yeah.
wrote a put option contract.
Yeah, there's nobody from the parks at all. Bro, you still? Why is this recording so long?
It's just not $1, right? So that's the risk. Your risk. So for call option writing, your risk is infinite. Your upside risk is infinite, but for put options writing, your risk is to the downside to zero. Okay? Stocks can go to zero. There are hundreds of thousands of companies that have actually dropped to zero.
Time to execute.
Right? They have happened in the past.
It's all about execution.
Stocks can drop to zero. You may think that the stock, this is a very common saying in the stock market. You think that it's low right now, but it can go lower and lower and lower, right?
Alright, but if I get a sad teammate, I'm gone. I'm telling you that right now.
Okay? And then, why do you trade options?
Closing that.
The last slide. No, this doesn't run that fast.
Oh my.
So number one.
He gonna hop off. I know it. Every time. I promise you, every single time.
It's not needed, but it's small good money. Mike and I always, we trade option earnings. We do writing, we do option strategies, we do credit spread, debit spread, and condos, which we learn later on in the course. Right? We do all of that to generate some small money. It's good money, right? The next reason to trade option is to hedge your portfolio from major events, right? Election. That's structure tomorrow.
Let's see.
There's going to be a
I finally got a level 40 on my team at least.
Oh, who's going to win the
Let's see
election?
though.
If Biden wins, so-and-so stocks can go up. If Trump wins, so-and-so stocks can go up. And these stocks can go down, and these stocks can go down. Whatever it is. Let's say your portfolio is in for a wild ride. What you can do is, you can buy some call options on certain stocks and put options on certain stocks, right? To protect your portfolio. If the market crashes and you have put options, even though the stocks may be dropping, you can make some money through those put options. Okay? This is how you hedge your long-term portfolio. Because if it's long-term, you don't want to sell your stock, right? You don't want to sell your stock, but you want to have some kind of protection, right?
You know, if I'm too much, let's go.
Okay? And the next 2 points are very important, guys. Pay attention. Return on investment is higher when trading options. Higher percentage of return for a smaller move in the underlying security. So when I first started trading, right, I was trading small to mid-cap equities, meaning I was just buying and selling stocks. Like I didn't have a huge account, but my account did grow because of starting to trade equity, right? So let's say I spent like $10,000 to buy 100 shares of a $100 stock. For every $1 it moves, right, I only make $100, right? So if I risk $10,000 and the stock made a $1 move, I make $100. Now that's not a great return on investment, right? So that is not how you grow your account. When you're starting out, you can't be Warren Buffett and wait like 50 years to make money, right? You can't be doing that. So that's why we trade options. So if you put the same $10,000 on Apple calls and the stock moves $1, right? With that $1 move, you could potentially make $3,000, right? So you risk 10,000 to make 3,000, you made 30% return. Okay? So that is why we trade options, especially that's why you recommend when newbies come into the market. If you want to really grow your account and take your account, become more financially free, right? You want to trade options first. Return on investment is higher when trading options. So you get to make a lot of profits for a small move in the underlying security.
Yep.
And maximum loss is capped when buying options. Like I said before, right? If you're risking $200, the maximum that you can.
I did not mean to do that shit.
Right?
What the fuck?
In stocks, also it's the same. But let's say instead of risking $200,
I did not mean to do that shit, bro. I wanted to pass that shit. What? Why they made me do that dumbass way up? What I mean?
Right? I lost $10,000.
I'm sorry, I'm sorry.
Even if the stock made a $1.
Bro, let me tell you.
Right? So maximum loss is capped when buying options. You won't risk $10,000 on overnight positions.
It's shot, bro.
That is the good thing about options. You don't have to risk a lot of money to make money, and even if you risk some money, even if it goes to zero, your maximum loss is capped, and it's a very small portion. What is premium again? Premium is the amount you pay to purchase an option contract. Wait, so if you want to buy the shares of the option, selling the contract, can we do so? You can buy the share whenever you want. It doesn't,
I was like, too.
Selling the contract. So options and stocks are two
different
things.
I say you are.
Right? So you can buy stocks however you want. You can buy option contracts whenever you want. Right? Those are two different instruments. Alright, that's all I have for you guys today. Hope you guys enjoyed today's lesson. And I strongly recommend watching these lessons. And, get yourself up to speed. It doesn't matter if you didn't understand it right now. You just keep watching it, and you guys will be good for the next class. Alright, now it's time for questions. Thank you.
Okay. But I gotta bail out on. What the fuck? That's all. I'm not worried about it.
Alright. Did you guys enjoy day one?
Oh yeah, cool.
Fantastic. Do you have any questions for day one? Just try to focus on
that move
today, because most stuff, if you ask in the future, we'll be going over it.
Mike, where are you? You're recording a lot.
Oh, man, I'm in one of the bedrooms in my new place, and there's no furniture. So there's a lot of that going on.
Oh, you're in hoes now.
Mike is better. Are you sleeping on the floor, Mike?
No, man.
I ain't gonna lie, y'all. I was distracted. My fault.
Yeah, replays will be posted, guys. There will be time for processing, but it will be posted and it will be available.
Yeah, we stop expecting replays to be posted the night of. We have to download the video. So I feel like I have to say that on day one.
Get out of here, man.
We have to download this 2-hour video.
Jordan, bro, stop disrespecting me, man.
Post it on the website for you guys, so it takes up to a day. Please be patient.
Mike, what's your restaurant?
Oh, man.
You know, a lot of stuff we will be explaining later on in the chat room.
Yeah.
Yes, Greek is our lesson number 5.
There's no minimum account balance.
Yo, bruh.
Yeah, Thinkorswim definitely recommends that.
In-person cash account. Best way to go.
Cash, yep. Yeah, Weeble has gotten a lot better. So
that boy tweaking. What the?
Yeah. Another thing is, don't complicate the platform.
What you mean L? How's that L, bro?
Find the perfect platform from day one. You're gonna try some, you're gonna love something,
Really?
you're gonna get something. And as you gain more experience, you're gonna.
Why are y'all spamming L?
Focus on the process more than the tools right now.
Too easy, baby. Oh yeah, I'm over here. Come on. Oh yeah.
Jackie, no, but if you go on their website,
Yes, sir.
it's just Lightspeed Trader.
Let's go, baby.
The application. For them, it takes like 2 or 3 weeks to get back there.
Nah. Hey. Let me guard him on my sub. Let me guard him on my sub. I am not worried about this dude. Come on,
All your names are mixed up.
bro. Pass him the ball, bro. I don't want to hear nothing from this dude. Come on. What you mean L string? What you mean? Hold on, bro.
Recommended starting balance is 1,000 to 5,000 in our opinion.
Stop playing with me, dog. I'm Jordan, bro.
Starter amount, in my opinion.
Don't ever disrespect me like that ever again. I'm Jordan. What is you talking about?
Just because you need room to F up $1,000, you know, you just want to go all in with that.
I look nothing like that ugly ass nigga. Stop playing with me. Jay got jokes. Keep playing with me, though.
What it be if you have $5,000?
GG, man.
$5,000, put your hands up. I'm just playing with you.
Tell me some snack, yo.
Someone said they had 4.4.
Tell me some snack, yos. Disrespect me like that ever again. Don't ever do that. I look nothing like that nigga. That ugly ass nigga.
Don't
ever say that again, bro.
I mean, in my opinion, it's possible to make $400,000 with $5,000. You guys?
Yeah, but I would just focus on quality trading before we start focusing on profits.
I look exactly like Snaggy. Hold on. Come on, camera focus, dude. Oh yeah.
Any questions on today's lesson, guys?
I look like, hold on. I look like this dude.
Future lessons.
You sent me. I look like this dude.
Yeah, don't focus
This
on
is my camera real quick.
I wouldn't focus on goals.
Hold on. Stay right there. Nigga, hold on, nigga.
Access to the course every day, every time we finish work, we give you 7 days to do it. So a whole week.
Come on, camera focus, nigga. Why is it so bright, nigga?
This is a live training course.
Leave them weak ass nigga. I look like this nigga.
We're gonna teach you guys.
You sent me this nigga. I look like. Hell, you nigga. Fuck you. Tell me some L stream, nigga. Why you watching? Get out, man.
Or are you still on vacation? I
What the fuck is you talking about, bro?
This is just like
L stream, nigga. Fuck you, nigga. Fuck.
Was that in your story earlier?
I'm gonna stop now.
Nah, y'all got to watch Mike's story. Yeah, seen nothing yet. Where are you tomorrow, Mike? Dubai, then France, then
Chicago, and then Atlanta.
we got here, man. Telling you. And how many flights you took this year, Mike?
Yeah, pause.
If you give a man a fish, he'll eat for that day. But if you teach a man to fish, how to fish, he'll eat forever. So this is me, Mike, and a rapper. So I am Aristotle. I am from Atlanta, Georgia. I have been training for the methodology over that day. But if you teach a man to fish, house about 5 or 6 in that range. I've been working since I've been in the military. What intrigued my knowledge was the fact that I was going there and just wanted to figure out what to do with the money in my safe, because I was saving up a lot of cash money.
Good, life, good. We got some you.
Basically, I was kind of smart. You know, I was kind of, why was it? I was smart. I was just thinking, you know.
Bro, what is that audio?
Physical cash in my safe. I should figure out a way to invest the cash. You know what I'm saying? So that's pretty much my thought process of just wanting to learn how to invest.
Okay, you can stop. That was a long ass recording for what, dog? Okay. This is dude that we Williams. I mean that was on my thing, I think. And he was trash. Wow. That's tough. See the nigga was talking shit. You see the nigga was talking shit? He had no words to say to me after that. Keep talking shit, nigga. Act like I'm ass. Keep talking shit. See what happens. Talk shit to me, you just gotta feel the consequence. It is what it is. We boy. We got it. Okay. If we get a center, that'd be nice. But most likely not. That'd be nice if we get a center. I don't know how I feel about that. We'll see. Let's see if we good. Let's see this dude good. Was he open? Oh, damn. Good summer, boy. Yes, sir. Let's go. Let's go, baby. What the fuck? I'm going this side. I mean, so go so slow bad at my player. What the fuck? I passed to the wrong person, dog. Lopes, come on. Nope. I ain't gonna lie, we lost this game. Let's go. What? Bro, what the fuck? How they get these easy steals? What the fuck? That step back is crazy. What the fuck? That's game. ain't gonna lie. I ain't gonna lie, some of the shots he was wide open though. Damn, 20? Damn. That nigga really carried the whole team. And that was my man. Damn. Yeah, my record right back negative. Nice. Nice. Nice, people. Thanks. Somebody good, please. Somebody good. Somebody good. I'm out of here, y'all.